Hi, everyone. I'm Katie Talati, Director of Research at Arca. I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. All right, everyone, I hope you're buckled up and ready to go for this week because it has been an interesting one. To start, I'm going to be talking about Immutable X right here. Immutable X its token is called IMX. It was down 4% over the last week. So IMX actually focuses on NFT and gaming use cases for Ethereum. Specifically, it is like a layer 2 type of application. So it allows for faster transaction speeds and lower fees. I know gas fees are like one of the big concerns on Ethereum right now. So this is one of the projects looking to solve for that. So GameStop actually selected Immutable to build its NFT marketplace, with Immutable also providing a $100 million grant of IMX tokens and contingent grants of another $150 million, subject to hitting certain milestones. So that sounds great, right? Guess what? GameStop turned around and immediately sold $42 million worth of the token, reversing the price spike from the announcement and sending it down as much as 30%. Yeah, obviously they probably should have put some lockup agreements of some sort into that $100 million grant or one of the contingent grants. But I guess lesson learned. Anyway, so yeah, that was the major news on IMX. On a more positive note, Immutable will be integrating with other projects in the future, in hopefully sometime in the first quarter of this year. NFT trading volumes on Immutable were down 58% month over month. This is an early project, though, I would say, and I think that we're definitely looking towards this one to see how we can really scale and speed up a lot of NFT transactions. I think NFTs, specifically as they've become very retail focused, or they've brought more retail users in, it's really important that something like this does offer lower fees. A lot of people get scared off from using applications on Ethereum for the first time because it's $150, $200 to send a transaction, which is just not economical for somebody playing around with maybe $100 within the digital assets ecosystem. So definitely looking for projects like Immutable X to help turn around this problem. All right, next up we have Solana, or the SOL token, which was up 3.5% week over week. All right, so there on Solana, there's something called the Wormhole Bridge. The Wormhole Bridge is a bridge that essentially takes assets from Ethereum to Solana and allows users to send over assets. The Wormhole Bridge last week was hacked for over $320 million, or 120,000 Ethereum. That's a lot of money. So basically what the hacker did is they actually so what happens when you send assets from Ethereum to Solana, you're sending your Ethereum into the wormhole, and you're getting a pegged asset. It's a pegged representation of Ethereum on Solana. So on one end, they essentially have like a bank of Ethereum for when people want to redeem that pegged Solana from Solana back to Ethereum. So what the hacker did is they stole the assets that were kind of held in this bank vault. And as a result, it meant that all the pegged ETH that was on Solana had no backing whatsoever, which is really crazy because if you think about, there's so many far-reaching implications within DeFi if you have pegged assets just being valueless essentially all of a sudden. So essentially there were actually there's a few hours of people essentially really, raising alarm bells, worrying online. The network actually got dragged down during this time because there was a lot of hyperactivity, people trying to pull out assets, people trying to redeem in different places. Yeah, pretty scary. But what happened was Jump Trading, which is the firm that purchased the blockchain firm that created Wormhole last year, actually stepped in after a few hours and said that they would replace the ETH that was stolen to make community members whole. So basically the move stopped kind of the bleeding, or stopped the panic selling and moving around of assets that was happening by most users, since the ETH was going to be replaced. And it did reaffirm confidence in the Solana ecosystem, I think, where a lot of people were definitely at the point of, wow, the network has gone down several times in the last few months, and now we're faced with this. But it's also led to a lot of questions about how decentralized Solana is. Just because you can have one potential counterparty basically say, oh yeah, we can just replace $300 million. Anyway, since jump trading replaced the ETH in a timely manner, Solana suffered only minimally, ending the week up 3.5%. So there you have it. All right. Next up, we have MATIC, which was up 27% week over week. MATIC is the token of layer 2 scaling solution, Polygon, which is used across a number of DeFi projects. And it's actually the largest scaling solution by total value locked. Currently, it's total value locked. This number was as of yesterday, so it might be different, but it was 5.4 billion, which is the largest of any non-layer 1 chain. On Monday, Polygon announced it has raised $450 million from Sequoia, Tiger Global, and SoftBank. And basically cementing it as one of the most well-capitalized digital asset projects. So funding announcements are obviously pretty big in this space. A large amount of funding like that really just means that they have the ability to build out any type of ecosystem that they need. They can offer grants. They can hire the best developers in the space. I'm not totally privy to what the use of proceeds are for the round, but this is definitely a very positive sign for the ability for MATIC or for Polygon to last through any potential market turbulence with such a large treasury of assets. All right, finally, we have LEO. So LEO is up 64% for the week. For those of you who don't know, this is a bit of a complicated story that reaches back quite a few years. LEO is the token that was issued by crypto exchange Bitfinex in 2019 to essentially help plug a hole in their balance sheet that was created by a bad counterparty that lost them $800 million. So for a little history, for those who aren't familiar, Bitfinex's parent company is the same parent company as Tether, USDT, which is the first stablecoin that was on the market. Now I think it's been eclipsed by USDC, but at the time, or for Tether's entire existence, because it's a company that's created outside of the US, a lot of people have had questions about, is Tether truly backed one-to-one? Their process is pretty simple too. You just go to their website and you say, hey, here's my actual US dollars, and they give you USDT. The assumption is that they would be fully backed one-to-one if you ever needed to redeem. So Tether, so the reason that this counterparty lost $800 million is they were handling some of the Tether, the USD that was backing the Tether assets. So $800 went missing. I don't really know how, but as a result, a lot of people started to panic that Tether would lose its peg. And Bitfinex essentially stepped in and they issued the LEO token and used that money to raise funds to plug that hole. But one functionality of the LEO token was that, LEO, the token, acts like most other exchange tokens. It's basically on a day-to-day basis, Bitfinex does buyback and burns on the LEO token based on the exchange's revenue that they make. One stipulation, however, was that if Bitfinex ever recovered funds from a hack that occurred in 2016, for many of you might remember it, many don't, somebody basically stole 119,000 Bitcoin, among other assets from the exchange. It was the largest hack at the time. They promised that if assets were ever recovered from this hack in 2016, that they would use 80% of whatever was recovered to buy back and burn LEO from the market until all out. And essentially the idea is that they would continue the buybacks until all outstanding tokens have been burned. So what's super interesting about this is it was very much like a call option on the idea that someday they might recover this money. But in most cases, money lost in hacks is generally not recovered. Most of the time, people essentially they put any cash or money stolen through mixers or other things to kind of mask their transactions. In some cases, they can track them, and so people know to never touch the assets again. So very unusually, but yesterday news actually broke that the US arrested a couple attempting to launder $4.5 billion in assets that were actually tied to the Bitfinex hack. So like I said, totally, this is such a long, winding story. This happened over 5 years ago, and it's amazing to see these assets recovered. But as a result, the implication now is that Bitfinex will be recovering $4.5 billion in assets and will be using that money, or 80% of it, to buy back the LEO token from the market. So this was very unexpected, but the token reacted favorably to the news, trading up over 31%. All right, well, that's all I have for you guys this week. Thanks for joining. I hope you enjoyed my insights. Tune in again here next Wednesday at 1 p.m. Pacific to hear what's driving token prices.